The higher gold goes, the lower the dollar goes. Now, number one, that would allow us to someday sell manufacturing. That's what everyone else has done to us. Number two, makes paying off your debt easier. And number three, if gold continues to go higher, that every time money moves, anytime, whether you buy a pack of cigarettes or a new house, it's backed by stablecoin, backed by 90-day or less short-term treasuries, and the interest isn't transferable. So whether it's Tether, who's amassing all of this gold, who I believe the deal was, here's what's going to happen. You're going to buy this shit. You're going to make millions and millions and millions of dollars and sail off into the sunset, but you will sell that gold to the U.S. Treasury. And now Bo Hines is going to come in and make sure that you sell that gold to the Treasury. You're going to accumulate gold for the U.S. government by proxy. So now we're not anywhere near this. It's you guys doing it. But that gold somehow is going to make it into our coffers. And now as gold continues to move higher and higher and higher and higher, because every time money moves, that interest goes into gold, you devalue the dollar more and more and more and more and more and more, and the dollar goes higher and higher and higher and higher. Now think of Judy's idea. Van Eck funds came out and said if the dollar loses reserve status, it goes to $139,000. That's them saying it, not me. Van Eck, the mutual fund company, and their emerging bond market. The world is changing. We must bring back manufacturing. And I think my thesis centers around gold-backed treasury bonds and the Genius Act and what that does to the front end of the curve and how this all intertwines. But the moral of the story is if he does say that we're going to issue a gold-backed treasury. Now, here's where it gets interesting. You had mentioned to me that there's these numbers, this revaluation that everyone thinks is coming. The Treasury Secretary said, we're not going to revalue gold. And I don't think they need to. This is where Tether comes into play. Tether, who, and all of the issuers of the soon-to-be new dollar stablecoin that will come out in January, the Genius Act. What has Tether been doing for the last 3 years? Well, they bought more gold than anyone in the world but the Central Bank of Poland.
They're becoming a gold accumulator. They kind of look like a central banks kind of to a degree with that philosophy.
Right, and who's the CEO of USA Tether, who is the Genius Act component of Tether? Well, that's none other than Bo Hines, who was Trump's crypto czar through August. And I remember Tether was in trouble for a while by the Justice Department. That just went away. No one really talked about it.
They were based outside of the U.S. There was a lot of issues going on, and so they've restructured that. And to me, it looks like they are getting it ready to be something.
Well, right? And it's kind of like my feeling is that wink, wink, nod, nod. You know, the Clarity Act says you cannot transfer the interest, right? You have to do something. What have they been doing? They're putting into gold. What does that do? Well, besides pushing gold higher, it devalues the dollar. The only neutral asset by which you can, a neutral reserve asset that you can measure something by, neutral, is gold. If you try to measure it against another currency, remember what Triffin's dilemma says? Countries sell their currency in the open market to buy dollars. We don't give them enough through trade alone, thereby devaluing against the dollar. It's a faulty measuring stick, like the Dixie. The dollar index is a poor measuring stick. You're measuring it against a melting group of currencies. Instead, measure it against the one neutral asset you can measure anything by, and that's gold. The higher gold goes, the lower the dollar goes. Now, number one, that would allow us to someday sell manufacturing. That's what everyone else has done to us. Number two, makes paying off your debt easier. And number three, if gold continues to go higher, that every time money moves, anytime, whether you buy a pack of cigarettes or a new house, it's backed by stablecoin, backed by 90-day or less short-term treasuries, and the interest isn't transferable. So whether it's Tether, who's amassing all of this gold, who I believe the deal was, here's what's going to happen. You're going to buy this shit. You're going to make millions and millions and millions of dollars and sail off into the sunset, but you will sell that gold to the U.S. Treasury. And now Bo Hines is going to come in and make sure that sell that gold to the Treasury. You're going to accumulate gold for the U.S. government by proxy. So now we're not anywhere near this. It's you guys doing it. But that gold somehow is going to make it into our coffers. And now as gold continues to move higher and higher and higher and higher, because every time money moves, that interest goes into gold, you devalue the dollar more and more and more and more and more and more, and the dollar goes higher and higher and higher and higher. Now think of Judy's idea. Van Eck funds came out and said if the dollar loses reserve status, it goes to $139,000. That's them saying it, not me. Van Eck, the mutual fund company, and their emerging bond market team came out with this paper. Now think about that. You sell a 20-year bond deliverable in 20 years for $20 million worth of gold. At today's rates, that's about just over 4,300 ounces. at 139,000. Well, geez, what's that? It's about 130 or 40 ounces. And they didn't have to artificially. Now, they could market to market, and they should. They could mark the gold that's at 42.22 to market, whatever that price is, which would give a big boost to the Treasury General account, because every $4,000 increase in the price of gold gives a Treasury General account $1 trillion free and clear. It's an accounting gimmick using gold certificates. But the moral of the story is, if you have neutral parties like Tether, like JP Morgan, like Citibank, like all issuing these stable coins, and the Clarity Act says you cannot transfer that, and Trump says this is what's going to happen. You are going to accumulate gold for a period of time and sell it to the Treasury quietly. Now gold gets accumulated by the U.S. government on the down low. All these companies make a gazillion dollars. The dollar gets clobbered, which makes paying off the debt easier, which makes sending manufactured products to the world much easier. And the key to it is the no upfront borrowing costs of Treasury bonds that issue no coupon, just redeemable in gold. Meaning you sell a bond I sell a 20-year bond to you, you give me $20 million, and I owe you $20 million of gold in 20 years. Okay, cool. Zero coupon. Now with that 20 million, I build a state-of-the-art manufacturing center. And as gold continues to move higher through and by the way, every time money moves, what happens to the short end of the Treasury market? Plastered to the ground. The dual mandate of the Federal Reserve has just been neutered. So now you don't have to worry about, is he a hawk or a dove? It doesn't matter, because every time money moves, short-term treasuries are being bought. That synthetic demand for the Treasury that plasters the front end to the floor. And what little interest is accumulated goes to buy gold, which continues to devalue the dollar, which continues to push gold up. So you don't have to revalue it as a country other than marking it to market. And over time, it keeps going higher, 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 higher. The dollar goes lower, lower, lower. You can actually bring back manufacturing at zero upfront borrowing and sell products to the world and look our kids in the face and say, we fucked up in a big way. But you know what? We're going to do something about it. And God bless him if this is what he is doing. I hope he is. I'm the only one stupid enough, or maybe brave enough, to say this is what I think he's doing. We'll find out. But if not, our kids are in big trouble. We all are in big trouble. We don't make anything. We're broke. We're insolvent. We're uneducated, and we're in debt. And here comes AI. It just doesn't work anymore.
When we're looking at gold to silver ratio, some people are playing it with physical metals. Other people are playing it with, other stocks or ETFs that they might hold. And mining stocks, things like that, where they hope that there's not as much of a conversion fee. However, I will throw out that there's still capital gains that come into play with that. So you got to watch out for long-term versus short-term.
Best to do within an IRA in that case.
Unless it's in an IRA, then it totally changes it. And, none of this is financial advice, guys. We're giving you our take on things. You need to look at that for your own situation. But looking at the gold to silver ratio, whether you play it physically or on the paper side, how do you see some of these things changing that ratio? Do you see gold getting stronger if there's an announcement of these gold-backed bonds? Or do you think we'll continue to see silver gaining on gold?
I mean, I think gold would obviously get stronger. But if you go back to the beginning of time, there's a 90% correlation in the way the two move. Not always in perfect symmetry, but as one goes, so too does the other. So what I can simply say is this, that long-term averages, kind of like, baseball players who get 600 at bats a year. There's been one baseball player in the modern era who batted 400. You know who that is, by the way? Ted Williams on the last day of the year. Ted Williams.
I know who Ted Williams is, but I don't remember the stats on that.
I don't remember what year it was, but it would have been in the 50s, and he batted 400 on the very last day of the year. And now that's everybody. Of all the players since then, there's only been one guy. So if your favorite baseball player for the Angels or the Dodgers, Ohtani, if he started out the month of April, this is a guy that gets over 600 at bats in the season. If he starts out the month of April batting 600, I would bet you everything I own that he finishes under 400. Yep. And that would be a pretty solid bet. That's the law of averages, the regression to the mean, where, if you're 300, you're in the Hall of Fame. So the same thing I think is true here. The further away you get from long-term established averages, the greater the magnetism that regresses you to the mean. And it was 16 to 1 for 5,000 years, and that matched up with the geologic ratio. It's now 7 to 1 geologically. The price has been misconstrued or bastardized by the Western system that has suppressed silver for whatever their reasons be, the military-industrial complex or whatever the reasons are they have, where 8 Western banks have maintained the largest concentrated short position of any commodity ever traded on COMEX, distorted the price. So at the levels that we're at, I mean, it certainly are in favor of silver, and it doesn't matter how you do it, whether it be physical or ETFs or whatnot. I think it's a very solid trade, but the market can stay irrational longer than you can stay solvent. That's the old statement. I've always chosen to do it in physical. Within an IRA, it is best. You have no tax consequences. But you're right, you do have the bid-ask spread and that kind of stuff. Probably the least friction would be doing it through an ETF in an IRA. I don't like ETFs, not even a little bit. And I think they're part of the tools of the cartel. Like everyone's talking about all the gold that's left GLD, but I would say, well, some has, yes, some hasn't. And that's what they want you to believe, because if I'm JP Morgan, I can take 10,000 shares of GLD and convert it in what's called a share redemption quietly without anybody knowing. And I can take that gold out of the trust and I can either keep it, I can send it to COMEX, I can use it to cover a position, or send it to China and make a $85 an ounce premium. That arbitrage that hasn't gone away in God knows how long. Same thing with silver, about $10 or $11 an ounce. I send them 10 million ounces, $11 profit. I just made $110 million. And that's happening. And so a lot of it's coming from SLV and from GLD. It is probably the least amount of friction in doing something like this. And in an IRA, you have no tax consequences. But it is the opportunity of a generation, in my opinion, when price discovery is allowed to exert itself as it should. It's something people should be aware of, for sure.